Good morning, good afternoon, good evening. My name is Gaurav Arora. I look after Coalition Greenwich's business across Asia Pacific and Middle East. Thank you for joining us for this Corporate Finance Forum on ESG. I'm also joined by my colleague, Mélanie Casalis.
And I'm looking after a large number of European banks. I'm located in Paris, and today we'll provide you with high-level insights of ESG for corporate banking. And Gaurav will start on highlighting the key points.
Thank you, Mélanie. So let's get into it. We wanted to share highlights from various studies on how the buy side is approaching the topic on ESG. And I think if you look at some of the key themes which are coming out, I think it should not be a surprise to anyone that companies are really eager to meet some of these ambitious ESG targets. So nobody is really denying it. I think a vast majority of large companies have they either implemented or are in some ways on that journey to basically be prepared and to be on their journey to meet some of the goals which they have set up. Now, it's not easy. But because if you look at some of these policies and if you go by businesses, then at an overarching level, we do see that there is clear recognition. But when you get into specific areas such as trade finance, then it becomes a little less prominent. And there are definite we would call that as an opportunity set where companies also need a lot of guidance, a lot more advice from some of their banks. To really take them through this journey. Now, talking about some of these significant challenges, to a certain extent, we do feel and we see across the markets that most of these companies are still in the process of understanding what ESG means. And if I can take an example closer to Asia, I think we all know that there are no set standards. And in a multi-jurisdictional region such as Asia, you can find various complications in terms of what is acceptable, what is not acceptable, and how does that change from market to market. So some of these challenges, again, not surprisingly, are more around lack of clarity, some of the frequent changes in standards, and then at the end of the day, it all boils down to cost. So cost of implementation, some of the data availability, the trust in that data also is a factor which still needs to be ironed out to a big extent. Now, with all these and we should not be generalizing all corporates under one umbrella, but we all know that there are distinct personas in corporates. We do believe that banks have a substantial role to play to support their clients on this ESG journey. So the opportunity definitely is there where the banks can really step up to work with their clients through thought leadership, to also understand where each one of their clients are on the maturity curve, because not everyone is at the same level, and to guide them in a manner which is most, I would say, respectful to the stage where they are in. Now, if you look at some of these statistics on how the ESG journey is playing out across the globe, you'll notice on the left-hand side of this page, when we ask corporates across Western Europe, in Asia, and US, should not be a surprise in US and in Europe, you see that nearly 85% of the corporates said, yes, we have a clear ESG target or goal. In Asia, it's slightly lesser, although it has jumped up quite significantly over the last 3 to 5 years. Let's take the no with a pinch of salt, and we'll get into some of those reasons why clients are saying no. Because there's a caveat here. Nobody's saying that no, ESG is not important. That's not what the no here represents. We'll get into some of the reasons why they are saying no here. But before that, if we tackle one element or one part of the business which is quite important around trade finance, this year when we dug into specific aspects of sustainability targets in trade finance, you can clearly see that when you get into some of the flow businesses such as trade, you see that the prevalence of ESG kind of comes down. Again, we see this more of an opportunity set for banks as well as clients to really push through some of the challenges. And we all know that there are many challenges to implement standards, especially around supply chains, especially across cross-country supply chains. We know that it can be quite challenging. However, again, this also represents a huge opportunity for all of us to move forward on this journey. Now, let's take the nose with, and let's dig into why clients are saying they do not have a target or goal in place. And some of the key reasons which are really coming through are around lack of clarity and organizational structure. I mean, if we think about it in the bigger scheme of things, ESG is still a relatively new topic. And the prevalence or the understanding can be somewhat siloed within the buy-side organization. So you could have, and most of the organizations, or majority of them, already have chief sustainability officers and a pillar which kind of runs through. But has that really percolated across the different divisions? Maybe not so as yet. And that's where we see some of the lack of clarity coming through, because in some part of the organization, it can be quite high, but it might not actually have gone through in the most similar manner across all the divisions of the buy-side organization. We are also competing against other business priorities. The world is changing quite dramatically. We are in a stage where we are dealing with multiple challenges across disruptions in supply chains, high inflation, supply shocks, and a shaky geopolitical scenario, to say the least. So other business priorities also sometimes kind of take precedence as well. So it will always be there, but we all know that this is a topic which we cannot ignore. So we do believe that this is a topic which we probably really need to continue push through, and should always be taking the share of mind for most of the senior leaders here now. Some of the tactical challenges still remain and will probably remain for the next few years around early stages and frequent changes in standards. As I said, nothing is really defined at this point of time. There are various ESG standards. There are no standardized aspects which we can look at across the board as well. So for a company to really think about, and we are talking about companies which operate across 30 markets, 50 markets, 20 markets, it is difficult for them to accept one standardized way of looking at things and to actually believe that that's going to be the standard going forward. So we are in a little bit of a flux situation at this point of time, and we expect that this situation is not going to go away. Having said that, we are starting to see a lot more of activity around regulators and some of the multilateral agencies which are starting to put some of these standards in place. So we hope that there'll be more clarity and less gray areas in this space going forward. And the last thing, which has always been and will always capture the most share of mind, is cost. Everything boils down to cost and resources. Again, because of the lack of clarity and competing priorities, cost of implementing something like this will always be questioned first. And not that it should be the biggest criteria here, but as the proliferation of ESG kind of goes through a curve, we do expect that cost of implementation also should come down over a period of time. Till that time, we'll always be fighting this battle, and we do expect that some of these cost concerns are unlikely to go away anytime soon. So we're in a place where nobody is denying the importance of ESG, but to tactically implement some of these solutions, to tactically implement some of these standards, across a fairly complex supply chain or complex organizational structure, we have to be also practical about the fact that it will take some time. It will take a lot of support from their banks as well to help them on this journey. To talk more about how can banks help on this, I'm going to pass this over to Mélanie.
Thank you very much, Gaurav. So with this context in mind, we wanted to understand indeed what is the role of banks to support corporates throughout the ESG journey. The page that you see here, the preliminary insights that we're currently collecting amongst the large US-based corporates. The first and most important results that we got is the 78%, which indicate that corporates are highly open into considering banks almost as an advisor, consultant, or an educator, really as a pairing partner when it comes to ESG. Because as Gaurav demonstrated, ESG poses quite a number of challenges, quite a number of uncertainties for corporates. So really corporates are looking at banks as a key advisor, one of the key advisors, to understand the key metrics they ought to put in place, how to measure over the time as well, what are the best practices from peer-to-peer perspective, what are the performance disclosures, investment strategies as well. Of course, that requires banks to be highly skilled and highly experienced and be experts in the ESG subject matter in order to advise their clients on those topics. This means they have to have a very deep understanding of the individual corporates they are interacting with. They must understand the dynamic of the industries as well as the individual markets, which tremendously change. And of course, having the understanding the internal structure, organization, sales size of the individual corporates they are working with. Quite closely related is the 56% of corporates that told us they are very much looking for banks to advise them on regulations and how to navigate the upcoming regulatory changes. And most importantly, what is the impact for those individual companies? So we're moving away from the more or very traditional role of financing, bank as a financing ally, to a bank as a true advisor, sparring partner into helping corporates navigating their ESG journey, and again considering where they stand in the individual developments. Now, of course, the financing part of it is an important role that banks have to support their corporates with. 60% of those corporates told us that banks must be a key actor by providing them with specific products, services to support the overall ESG and sustainable projects. So that can range from building, for example, green ships, building energy efficient buildings, reviewing, as well as Gaurav mentioned, reviewing the existing supply chains, which is a topic that is getting an increasing level of attention in the ESG remit. And about a third, of course, of corporates are expecting to receive more financing advantages, for example, more competitive pricing on the financing lines, greater availability of fundings, more flexible terms and conditions. So we really have two aspects, broadly speaking, of banks. One as a true consultants to help corporates throughout the ESG journey, as well as a role of being an expert into the product, solutions, services that they can support their corporates with, again, given the different levels and stages of ESG they're currently standing. The following page shows that essentially those key highlights need to be largely nuanced depending, as I alluded to, depending on the various stages that corporates are currently in the ESG journey. At the higher end of the spectrum, we would find what we have called the engaged users of ESG or sustainability finance. Those are typically organizations with a dedicated ESG departments, CSOs, or Chief Sustainability Officers, with very clear understanding of goals, of metrics in place, of KPIs in place, that is understood not only at the C-suite level, but throughout the multiple departments of the organizations. For example, the treasury departments, finance departments, as well as procurement, HR. So the full organization is fully aligned in regards to the ESG objectives that the corporates currently have in place. Now, what does that mean for their banks? Well, those banks need to be at least as experts as those highly skilled corporates. They require teams of specialists on the products. That represents, of course, immediate opportunities for banks to even further deepen those relationships they have with their clients and really have this full hat of consultant and sparring partner around ESG topics. Now, if we take the bottom of this chart, that really represents the other end of the spectrum, which is what we've qualified as skeptical companies or skeptical corporates. Those represent a minority of the entire corporates that we have interviewed so far. And they are typically corporates where they are not really sure of that ESG is relevant for the industry, for their company. They do not see any return, any value. There's typically no or very little commitment from the senior management on the specific topic, and it is definitely not their business priorities. Now, of course, the banks that work with those type of companies have to have a very different strategy to cover those companies than what we have seen with the engaged users. Those banks need to challenge the status quo, really have an attitude of teaching, adopting a solution-oriented mindset rather than a product approach, and really explaining how ESG is critical for those corporates and what the return and value will be for those individual corporates. So it's very much about understanding the main barriers and challenges of those individual companies. And then we have the vast majority of corporates that we've interviewed that are fairly receptive of ESG. As Gaurav mentioned, they are largely aware of the importance of ESG, but because ESG means and can mean different things to different people, those corporates are not very sure about the way to handle and to approach this topic. They are a little bit lost on how to implement those ESG initiatives, and quite frequently they also lack resources to set up and monitor those targets and objectives. So here we have a set of banks that must keep on focusing on informing and advising those corporates. So really walking them throughout the ESG journey that they are starting. And that represents obviously key opportunities to convert those companies into more engaged users of sustainability and ESG more broadly. And of course, this is very much a short-term as well as medium to long-term process, representing a high level of trust between corporates as well as the supporting banks. So that really concludes all the key highlights that we have on ESG for corporates. Thank you very much for joining and for staying with us today. We hope that you found this session informative, and we very much look forward to having you in our upcoming sessions. Thank you.